Good afternoon. I'm Sam Everington. I'm the Deputy CIO and Director of Products at Starling Bank. I've been with Starling for about 6 years now. Originally joined to lead the teams building the mobile apps and the developer APIs. And for the past few years, I've been responsible for product and product design in the bank. Today, I'm going to talk a bit about banking as a service. What is it? How could you get into it? And how could you use it to unlock more potential from your investment in technology? First, a very brief introduction for Starling, in case you haven't heard of it. Starling is a fully licensed UK retail and SME bank. We've been around for about 6 years now, and actually, uniquely, I think we were the first consumer digital bank in the UK to hit profitability. One of the reasons we've been able to do that is we run the bank entirely on our own in-house proprietary core banking system that we've designed to optimize the things that matter to banks, the outcomes, the cost-to-income ratios, and that kind of thing that help us deliver the profitability. And you can see the impact of this in the numbers now. We're an increasingly growing and sizable bank, and we've got about, actually on the SME banking, I think we're half the market share of Barclays in the UK now. So it's really growing from the tiny bank with 30 people that I joined some time ago. So today I'm going to talk a bit about a quick history, why are banks looking for new business models at all? And then if you're looking to sell your tech, where do you start? How do you get about it? What different models and approaches to market could you take? And then a kind of assessment process at the end to figure out whether it's right for you or not. So first of all, why are banks seeking new revenue streams at all? Historically, they've been pretty profitable and lucrative businesses. They haven't had to really, if we're honest, have to work that hard to make money or to keep their customers. And usually the current account is kind of the hook. It's the product we're all familiar with, but actually it's not very profitable banks. It's often seen as a loss leader. But it gets people in the door so they can then be sold the higher margin products, the loans, the mortgages, the savings and investments, that kind of thing. But this works really well for banks because customers have been very sticky. I can't imagine how many people in this room went and got their first account with their parents when they were a child, and they've probably still got an account with that bank today. It's a pretty common story. But that profitability is also one of those things that's led to a reasonable amount of regulatory scrutiny and political scrutiny and intervention and things in the last few years, and so the landscape is starting to change. People are becoming increasingly multi-banked, and critically, a lot of services that banks provide are being unbundled and coming from a whole number of new providers. Some of that is thanks to regulatory interventions like open banking and opening up access to the payment schemes. There's also competition coming from new banks themselves. So I think Britain went 100 years without licensing a new bank until Metro got their license in 2010. But thanks to a new banks unit and the regulator and a competition mandate, there's been 25 new banks launched then. Only a few of them are kind of full-service players like Starling looking to replace your existing bank. A lot of these are more specialist providers serving a particular market or a particular product segment instead. And the world around us has fundamentally changed at the same time. The smartphones are now everywhere. We're increasingly dependent on them to run our financial lives. And they've really changed the economics of bringing new financial products to market. You don't need the huge capital investment you used to get a branch network out there. Instead, you can rely on the digital storefronts provided by the mobile operating system manufacturers, Apple and Google. Obviously, it changes the customer experience too, and actually it takes a huge amount of work and investment to develop digital products that build the level of trust that you'd get from something you can see physically and go and visit on your high street. But it's something you can achieve, and it's important to realize how quickly that's taken place. Metro launching in 2010, the iPhone was only 18 months old or something, and they went down a very traditional model still of opening branches, and their technology is a core banking system they brought in from a traditional vendor. It's not a model you'd likely see launching now. And there's a whole bunch of new players in the market. They're kind of, competing on all the different individual products, both banks and non-bank lenders and non-bank financial services. Both the traditional credit products, the loans and mortgages, but also newer products, payday lending, whatever you think of that, peer-to-peer, buy now, pay later. Payments access is being opened up into different companies, wealth, savings, investments. And I think it's fair to say that anywhere in the world, if competition increases, margins tend to go down. And this disruption it's probably taken longer than people forecast, kind of like open banking did. It's taken a while to get people off. These customers are very sticky. People really don't want to spend their evenings and their weekends reviewing their financial products and making changes. But it's starting to happen. There's a few kind of fintechy firms that are hitting real scale, people like Stripe and Klarna and TransferWise. They are taking market share. They're taking margin away from the banks. And you can see that this is being noticed because at the response they're making. A huge investment in technology is being announced by all the big banks at the moment, and they're all going through huge exercises to try and cut their fixed cost bases as well to protect those profit margins. So it's clearly been noticed. So you're looking at your business now, deciding if you want to become a tech vendor, what kind of thought process you need to go, and how would you go about it? The most important thing, I think, is to really understand your niche. Your niche could be quite broad, but what is your strength as an organization? What do you have that's unique? What can you do at a fundamentally lower cost than anyone else in the market? Because you're going to be able to play there. You've got to play to your strengths because you're going up against some huge organizations. On the one side, you've got the big tech firms. People like Stripe are moving into more and more financial products in more and more countries. On the other side, it's important not to forget or write off the big tier one banks. They've got huge market scale, massive product sets, long established customer relationships, trust, and very deep pockets to fight back. And although banking as a service is a trendy new moniker, it's not actually a new industry in itself either. They've been in the game of transactional banking services, providing payment access, FX, cash management services, accounts, through to fully white-labeled lending and credit products and things for decades. This isn't a new business for them. They're just doing it on older tech, batch integrations, or indeed as fully managed services, just with someone else's name stamped on the top. What they're disrupted on is the technology. They haven't moved their platforms onto these real-time event-based API-driven modular systems that we see today that people are using to build new financial products. So you've got to have the right people and the right culture in place, but what really matters is this specialism. Are you experts in underwriting risk in a particular business sector and deciding who to lend to and doing that at a lower cost or quicker and making a decision faster than someone else? Are you specialists in particular investment products or particular lending products? Or you could look at yourself and go, actually, we're fundamentally a relationship-led business. That's the bit we're good at, and we'd rather buy our tech in, get that run by someone else as a fully managed service, constantly evolving, and we focus on the business of designing and offering products. I think for most mid-tier banks in particular, you're likely to be somewhere in the middle of that. There'll be some things in your organization that you're really strong on if you're this lender. You might have some amazing underwriting models, scorecards, decision engines, and data sources together, and so you can make that decision much quicker than everyone else. That's the thing you should own and operate and do yourself. The bits where you look more like other people, say you're onboarding KYC or servicing your customer contact, that kind of thing, potentially you buy those in as managed services and you end up with some combination of software you're running yourself that you're potentially selling to others to and software you're buying in. So you figured out what you want to do. What are the different approaches you could take to selling your software? I mean, one of the obvious markets to target actually is banks that look a lot like yourselves, just in other jurisdictions. Have a look around who has similar customer bases, similar product sets, because there's clearly some good alignment there, and they'll probably be interested in it. Or there's companies that want to become fintechs and become financial service providers that aren't necessarily banks, that aren't necessarily licensed. This is the real banking as a service where ultimately the money is sitting on your balance sheet, it's under your regulation and you're handling the money flows for them, but they're using their brand to offer financial products on top. That kind of thing's been going on for a long time, really. Or you could look to sell a single smaller component of your system. Actually, there's real demand and access just for domestic and international payments in this country. There's entire companies spinning up to do this kind of thing. People like Florm3 and Clearbank are there to process payments domestically. And on the international side, you've got people like TransferWise. Actually, TransferWise, like Starling, started as a direct-to-consumer offering and expanded into the business-to-business and TransferWise to banks offering eventually that they have now, supplying services to other banks. And this was Starling's first foray into software as a service, banking as a service as well. For 4 or 5 years now, we've been providing payments to a number of corporates and government bodies and that kind of thing. So, for example, SumUp make all of their merchant payouts each day to their end retailers through our real-time API platforms. At the other end of the, well, not the other end of the scale, it's important to remember, though, beyond the obvious bits, there's a huge, broad depth of systems and technology that banks are running. This is the rough scope of the different modules and components that make up the core banking system we're using to running Starling today. And any and all of these are interest either in isolation or in groups to other institutions. So for instance, banks actually spend a lot of time and investment on identity verification, onboarding, KYC, that kind of checks. We've weirdly been a reference point for the world for that for decades, albeit in the form of a printed piece of paper that you carry around into different shops and different branches and retailers. So there's a real market for that. You've got specialist providers like Onfido and Yoti and Humio, that kind of thing playing in that space. And the same is true for business. There aren't as many providers going in there, but we spend a huge amount of time and investment as a bank building seamless digital journeys to onboard and verify businesses to give them access to financial products. Or you can repackage a whole bunch of these components, a whole bunch of these core services together to offer financial products with other people. So lending products, there's a whole bunch of tech vendors offering kind of lending core systems, your Mamboos, 10x's, Thought Machines, as well as banks doing this like Starling. In the market, and the traditional banks have been doing that for ages. If you think of like the John Lewis credit card is an HSBC service sat underneath it in the leasing and loan and asset finance space where I used to work, and lots of those are white labeled equipment manufacturers being fulfilled and operated and serviced by a traditional bank. Through to kind of e-money accounts, e-money wallets, and current accounts, retail and business accounts. There's real demand for the technology and the systems that supply these. And most people still, actually at the current account level, are buying them from the traditional vendors, the kind of Temenos's, FIS's, Fiserv's, which they're moving towards as-a-service models to try and deliver the sales still. I think most of their work in that area at the moment is kind of migrations of existing customers into cloud system. I'm not sure any of them have fully re-architected themselves onto this modern real-time event-based internal architectures. The need, but there's lots of other providers looking to offer financial accounts there as well. And so you can take any of these components and someone is probably interested in it. So to kind of summarize, what thought process would I go through to work out whether this is a good fit for you and how you should approach the market? I'd start with your strengths. What are your strengths? What is unique to you? And critically, what IP do you own that you could take and you could license to others? You're going to want to be a good reference site for yourself too. But with the tech, critically, is it suitably built and is it suitably managed that you could offer it to someone else? Are you still investing in it? Is it constantly improving? Is it constantly being upgraded and deployed? Because anyone doing due diligence on a software vendor is going to want to know that you're still investing in it and it's still going forwards. When you're doing these upgrades and releases, can you do so without maintenance windows? With your own bank, you've probably got an appetite that means you can go down for 6 hours on a Saturday night, but if you're serving a bunch of companies and a bunch of different markets, finding that suitable maintenance window and getting everyone to agree will quickly become impossible. If you're running a true bank-as-a-service, software-as-a-service model, you should be able to constantly deploy updates and upgrades into your production environment all day, every day, during the day under peak production load. That's our favorite time to release is at lunchtime when the cards are at their busiest. Is your system built to be integrated with? Have you got APIs over everything you do? Are they well documented? Can you offer webhooks to people to actively push notifications out to the world to tell them something has gone through your platform? And then really importantly, how does it perform and does it scale? Is it all processing things in real time? Because again, someone doing due diligence on you wants to know that they can grow bigger than you are today. And so, yes, you've got a reference now for their first sale, but they might conceivably hope to be bigger than you are. And so you need to be able to evidence that you're running this system at a much higher volume than you need and that they will be able to ever reach. This is something we've put a huge amount of investment into. We run a full-scale test bank at Starling that opens something like 10, 15,000 new accounts every day. And that book's been running for years now, and we operate that under simulated load, so simulated mobile traffic, simulated payments and direct debits, simulated card schemes and settlement cycles. At the moment, we're running about 18 million accounts in our test environment. I think at some point next year, it'll become the biggest current account platform in Britain. So we're pretty confident we can cope with most people's needs now. And finally, how do you deploy it? What does your security model look like? Are you inside a data center, inside a corporate network? It's going to be pretty hard for anyone else to connect. Or are your services running, published, and secured in such a way on the public internet that other people can connect to it? You'll almost certainly need to be in the cloud to do that. And one of the best ways to figure out the suitability we found is to actually dog food, as the tech industry would call it, the service yourself. Use the things and the APIs you're planning to offer other people to build your own direct internal channels to prove that they work and prove that you can build good experiences. So if you log into Starling's online browser-based banking, you are using, that is built on the same APIs that we make available to third parties. We're not using any internal channels or any round-the-back tricks. It's the same login experience and the same API experience that we're offering to third parties. So thank you for coming and listening today. Hopefully that's given a bit of insight into banking as a service, the different products you could consider offering, and how you look at your business to work out whether that investment you've made in technology has got you to a point where you could consider offering it to someone else. I think we've got a few minutes. So I'm happy to take some questions. A couple of minutes,
so sit yourself down, rest those legs. Okay, thank you so much for that, first of all. So What we're going to do is whiz through a few questions. I'm going to have to be very careful about because there's so much here. Okay, are you at Starling able to sell these showed capabilities as a service to your clients or partners in a way of Amazonization, as Amazon does? Thank you, and thank you for giving me a very difficult word to pronounce when I said that.
No, I do know what you mean with that. Yes, I don't know if that's Anne's eventual plan, but yeah, Amazon famously started this way. They built the ability to run large-scale infrastructure for themselves and realized they could run a business line doing that. And this is kind of the same. Getting a banking license for anyone who's been through that process is a very slow, very challenging process, rightly so. It's a big responsibility you're getting. We don't plan to do that in every market in the world, but we've put huge investment into this technology platform, and so we are licensing that and working with banks all over the world and other providers to offer banking technology to them in their domestic markets.
Okay, one quick question here. Any tips for standing out in the crowded marketplace? And it is a very crowded marketplace. I don't think we'll dispute that.
It is crowded. I think one of the differences when people come to talk to us is I'm not a slick salesman, as you've probably seen from speaking now with slides and things. If you come and talk to us, the thing we will show you and the thing we'll talk through the whole time is our software. Anyone coming to chat to us, we just plug an iPhone in, screen share it, because we're doing most of this kind of thing remotely at the moment, and we'll just take you through real working software that you can see and use today. It's not a dream, a vision, a bunch of configuration with expensive consultants at lovely day rates. It's there, we're using it, you can see we're using it, and we've grown a very successful business on this tech, and you can start operating on it today.
Okay, Sam, thank you so much for that absolutely brilliant presentation and for taking on those questions as well. Thank you.
Thank you.